This film isn't about long-term investing, holding a position or spotting long-term trends. It's watching the markets minute by minute, hour by hour, getting out before the close of play, then diving back in again. So pay attention, as every second counts if you want to learn how to day trade. This video is going to tell you what you need to know about day trading. We're going to walk you through what day trading is, what you need to start, what you can day trade, and we'll look at a few popular strategies as well. Let's jump right in. Day traders buy and sell financial instruments within the course of a single day. The idea is to anticipate and make money from short-term price changes and fluctuations. Day traders typically close their positions before the end of the day. They don't keep trades open overnight, which means they aren't exposed to overnight risks. You can day trade all sorts of things. For example, indices like the S&P 500 or the DAX, currency markets, and commodities like oil. You can set trades by the hour, the minute, or even second by second. No matter the asset or the time frame, there are a few characteristics that day traders are on the lookout for. First, volatility. Day traders are usually interested in assets that are likely to make big profits or losses in a short time frame. Liquidity. The liquidity of an asset refers to its size, the number of buyers and sellers, and the amount available for trade. If an asset has high liquidity, it means there's a low chance a single trade will have a big impact on its price. High liquidity also means a low chance of poor fills or rejected orders, and that reduces the chance of slippage, which happens when the execution price differs from the requested price. And finally, trading volume. Volume shows how often a stock is being bought or sold. The higher the volume, the more trading activity there is. And the share with the largest trading volume over the last 3 months was Tesla, which averaged 180 million trades per day. Trading volume also reflects liquidity, which, as we know, tells you how easy it is to buy or sell. There are a few basic tools that day traders need to know about. First, they need good information and lots of it. Decisions made by politicians, CEOs, and economists can all move the markets, so day traders need to keep an eye on the news. Let's look at a simple example. Here's the opening price of Tesla on February 14, 2023. That morning, Barclays gave Tesla a buy rating. A buy rating is a statement from a company saying they believe a specific stock is worth investing in. Barclays also issued a price target of $275, and Tesla's stock price reacted immediately. Its value initially jumped by 9% and ended the day over 7% higher. Day traders who timed it right could have entered the market at 192 and cashed out at just over 209 and made a healthy profit.
Short sellers, however, would have ended the day at a similar loss.
Day traders will also probably end up spending a lot of their time watching this. It's real-time market data. A lot of day traders also use software packages that give technical analysis on price history and trading volumes. Day traders also need a trading account. As you're watching this film on Capital.com's YouTube channel, here's a reminder that you can day trade CFDs on Capital.com's trading platform. Here's something else you need to know, and that's risk. Day trading can be a high-wire act because traders are keeping their eyes on fast-moving assets, and that volatility means traders should ask themselves how much they're prepared to lose. Here's one more thing to factor in. Traders generally have to pay a fee or commission whenever they're making a trade. And because day traders can make lots of trades, it means more of their money is being spent on commissions. If you're going to day trade, you need to ask yourself what kind of day trader you're going to be, and for that, you're going to need a strategy. The bad news? No one strategy guarantees success. The good news? You don't have to just pick one, and there's plenty to choose from. For those that like to follow the pack, you can follow the trend. It means buying an asset when prices are rising and short selling when prices are falling. Fading isn't just a hairstyle, it's for the trader who wants to buck the trend, also known as the contrarian. It's based on the assumption that market trends won't last forever. So when the market rises, you go short, and vice versa. If the idea of holding onto a trade for an entire day is too long for you, they're scalping. Not ripping off the hair and scalp of a vanquished adversary, but an attempt to skim small profits off the top. Scalpers make tens or even hundreds of trades each day, trying to capitalize on small price movements. It's the fastest strategy there is, and a scalper may be in and out of the market in seconds. For the news junkies, there's news-based trading. Every day is filled with financial decisions, from rate rises, stimulus packages, earnings reports, and hirings and firings. News moves the markets, so eyes out for those press releases and company reports. Or there's high-frequency trading. Traders can use powerful algorithms to analyze the markets to spot market trends like mispricing in just fractions of a second. Day trading can be a roller coaster. Learning to keep calm and not chasing losses to make a quick recovery can be key. And remember, however good or bad your day of trading has gone, tomorrow will always look a little different. And while the auto cue says I should start singing "What a Difference a Day Makes," a song that reflects the dramatic changes that can happen in a short space of time, instead I'm going to sign off by saying thanks for watching.